My name is Aaron Blumenthal. I'm from 500 Global. We are having some technical difficulties because that's how technology works. So while we are anxiously buying time for our colleagues who should also be joining us on stage, both David and I are going to introduce ourselves. So since I did the first talk, why don't you do the second talk, David? You talk about yourself and then kick it back to me, and hopefully our friends will be joining us here in a moment.
Cool. Can you hear me, Aaron? So that presumably everyone else can hear me? Great. Hi, everyone. It's David Blumberg. I am sitting in San Francisco in my home. I usually live in Miami. I'm the founder and managing partner of Blumberg Capital. And just because we're a gay audience, I was the first openly gay founder of a venture capital firm, I think, in the history of the world. So the world is getting better and better and better. And don't get depressed, get excited. The things are better. It's better ahead than it was behind. And if I can do it, anybody can do it. So there you go. Happy to talk questions about personal career stuff and all that, and having families. I'm very pro kids, and we have two. My partner and I have two kids, and that's a great thing if you want to do that. Happy to talk about that stuff. But if we're talking about data and all that, our firm is very focused on early, so pre-seed, seed, and A. About $840 million under management. It's grown to about 2.4 billion. We've returned 1.2 billion to our LPs, so they're very happy because we've done a lot of distributions. We have some outstanding performance in our funds, if I'm able to say that. Our geographic focus is North America, Israel, and Europe, and we have about 66 companies in our current portfolio. We've had many dozens of exits in the past, and so that's a small fraction of the total history of our investing. We also have a new fund that's later stage that does Series B and above, so you can bring later stage stuff to us as well. Our ticket sizes are typically about $1 million to $6 million for the early stage fund and about 5 to 20 for the late stage fund. Our area of focus is B2B software, SaaS model typically, but we are flexible. Almost everything in our fund is informed by AI. I say there's a trio. First, you needed the hardware, the GPUs, to be able to do the computations quickly enough. Then you needed data to work on, really interesting data sets, and then the algorithm. So those three together are providing a really moment in history where we have absolutely incredible opportunity ahead of us to improve processes that corporations and smaller businesses and even individuals use every day, and then do things new that could never be done before at scale or at cost that was effective. So it's an exciting time to be here. Again, early stage, and now we do late. We're mostly B2B, so I don't know much about the B2C area. I don't know much about capital-intensive hardware projects or clean tech or things like that. Enterprise software is our area, but enterprise software is so wide. It goes to healthcare, supply chain, fintech, cyber tech, data center, kind of you name it. I'll pause right there, but it's really nice to be with all of you.
Great, thanks, David. And again, for those of you just joining us, my name is Aaron. I am the head of global platforms at 500 Global. We say the word global a lot, and if you didn't know what that means, it means that we're global, right? We are like everywhere. What's cool about my firm is that we are early stage investors generally, so we are sector agnostic and we're also geography agnostic. So no matter where you go, there we are. And I find that this is a really exciting time. It's always an exciting time to be a queer person, but it's a really exciting time to be a part of the venture community as a founder, because difficult situations like we're facing with the economy, which is part of the questions we'll be getting to today. This is when the winners are built, right? This is when the incumbents are selected. So it's a really great time to be thinking about this stuff, and we're really glad that we can have you join us and lend our expertise to that. Just a little bit about me, because I think that the best thing you should do if you are an audience member, you should say, who is this person and why should I trust the things that they say? I am a 7-time founder, which sounds big and fancy, but trust me, 5 of them were absolute disasters and I don't want to talk about it. 2 of them were okay, and if you buy me a beer, I might spill some secrets. But the important thing to know is that when it comes to the queeriverse, the queer universe, something to do with the word queer. What I look for when I'm investing in founders is like, what's the chip on your shoulder, right? What are you doing that's going to cause you to work harder, think smarter, be better than everybody else. And as far as my experience has taught me, what I can say is that being a queer person means that you come to this universe like, ooh, girl, take off the earrings. It's about to go down, but for business, right? So what I am seeing in our backstage chat here is that we're still having difficulty getting our co-panelists in. So David, if you don't mind, I might be our self-moderator, right?
Sure.
I'm not sure if the audience has been released these questions that we've been given or not, but I'm going to tell you two things. Number one, we're going to go through these just in case you have. If you have questions about the things that we're saying, please jam them into the chat. Number two, we would like to get through these questions reasonably fast because David and I were talking before this. Maybe it's because our names both start with Bloom. We have like a mind meld thing going. And what I will tell you is that the best questions for us to answer are the ones that come directly from you. So go ahead and into the chat, jam as many things as you can think about. As we get done with the questions that we were given, we will go ahead and share out the questions that we'll answer and sort of tackle those because again, we're here for you. So David, let's go to this. Let's talk about the theme of this space, which is exploring markets from a data-driven mindset. What does that mean to you?
Okay, and I'm going to just do a quick re-intro because it looks like a bunch of people have just joined. Hi, I'm David Blumberg. Also, we have Aaron Blumenthal. I'm the founder and managing partner of Blumberg Capital. We're an early stage fund based in San Francisco, New York, Miami, and Tel Aviv. We invest in basically North America, Israel, and Europe. Early stage B2B SaaS model stuff with a lot of AI. Okay, that's us. Now, what does a data-driven mindset say? Well, I would parse this into several angles. In a venture capital firm, we're looking to source deals, to manage and monitor and help our companies. And then we're looking for, I would say those are the two main sides of it in this regard. So what does a data-driven mindset mean in terms of sourcing? Well, we, as our practice, I think I'm speaking as a middle-sized venture capital firm. I think we have about 840 million under management and it's grown to a few billion. I think many venture capital firms operate the same way. We often do an annual retreat where our team will figure out what theses we want to focus on. So where are we looking? We use data to inform our search criteria. We have 6 T's that I can go into. What is the theme you're working on? Who is the team? What is the terrain, which is a word for market, like the shape and dynamics of what's going on in your industry, in your market. Then there's the technology. How does it work? The traction, how far are you and what stage you need going, and then the terms. So all of those have data components of them. So we look for large markets. We look for markets that are being disrupted either with demographics or technology or regulation or what's another way of disrupting. Anyway, some other major change in the market so that you can be sort of a 10x better. That's a basic metric we use. Can you be 10x better than the existing incumbents? And sometimes that's not invented here. You run into that barrier, but you've got to get over that hurdle. So you have to show something that's better than the competition out there, and certainly in the software area. So data, we are starting to do sourcing using, I'll call it data mining, where we're looking on LinkedIn for people that turn themselves into stealth mode, and we, if we're tracking those people, we'll ping them. We're going to use some generative AI to do some scripts or queries that will find interesting entrepreneurs in areas that we're particularly interested in. There's another way of looking across PitchBook and Crunchbase and so on, and seeing companies that are sort of rising up. That's for our later stage fund, where we can see companies that have seemingly done very well, have not raised another round, and we can call outbound to them. A lot of our world is not yet so data driven because when we're looking for pre-seed and seed companies, they haven't been listed anywhere. So it's really a hunt that is very personal and relies on the network. And that's why you should never be a jerk to anybody, because they will come back and you'll meet them again in another life. Or in this life. Build your network, be a positive person, be an energy giver, not an energy sucker. Contribute to the community, do all those things that make your name stand out there as, hey, that's a nice person to work with. They're helpful, they're positive, they bring energy. All that's good, and money. So that's how we've built our business over 30 years. I'll pause there. There might be some, then monitoring. Okay, let me do the second part, and then Aaron, all to you. The monitoring side is very data-driven. We keep a dashboard with the cap table, of course, and the KPIs of the company, and we're watching that. We're managing very closely. We're watching their cash burn and runway to see how they're doing. Okay, so I'm sure someone's going to ask. These days, we're looking to fund companies for about 2 years. It used to be kind of 12 to 18 months. That's not good enough anymore because it's a tough market. There's either a recession now or maybe there will be one. We don't know. We can't predict the future, but be prepared. So expect that there may be some downturn. So that's why we want 2 years of capital for our founders. Data-driven. Some interesting metrics that we look at in the SaaS area is net revenue retention. This is, you take your churn rate, your sales to your existing customers minus your churn, and that sort of gives you that. That's a very important thing for us to look at to see how well you're selling with your existing customers. Getting new logos is great, that's important, but if you're churning all the time and losing existing ones, not so good. So we look for nice recurring revenue growth. Margins, in software, generally they're good, but we want to make sure that they're rising or staying stable. Probably a few other basic things. I'll pause there because I've talked a lot of airtime. So Aaron, what would you say?
Oop, I guess you might say that that was a lot of data you shared with us. Ah, that's fun. See what I did there? Okay, great. So first things first, remember audience, we're here for you. You're not here to listen to us drill on and on and on. So I would encourage you, please, 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 if you have questions that are on your mind, go ahead and jam them into the chat. We would love to pivot and just answer your questions because you are why we're here. You are why we give our time. Happy Pride, by the way. On the exploring markets from a data-driven mindset, just a little bit of like organizing information about how I and to an extent 500 Global think about that. Like borders don't exist anymore, right? Like when you build an app, you build a service, you do something, right? Anybody anywhere can use it, generally speaking, at least from a venture capitalist perspective. If you have a local store on the corner, maybe not so much. But what I know about that is that we have a global economy and we also have a lot of things that we have to be very, very mindful of when we're thinking about how do we price things, right? What is the cost of our service? What are the incumbents? Like, how are they thinking about pricing information? And in particular, during these troubled economic times, right? How do I adjust, right? What should I do and how should we be doing that differently? That's a big reason to work with people like David or people like myself, right? People who are within the StartOut network, people who can help you think through these things. But most importantly, I think that the data points that you should be thinking about when you are thinking about expanding to other places, or rather, if you are thinking about expanding to other places, is first, track where are your users, right? Where are they coming from? What's important to them? If that's different in one place than it is in another place, that should be something you should be thinking about, right? And then second, who can you talk to when you have that data to help you think about things that are local, right? I have a lot of founders in the United States who are actually here in the Bay Area that I support, and they have like 10% of their audiences in Angola for some reason, or their app caught on their app caught, you know, a trend in Japan, and they need help sort of thinking through how do I localize this thing, what features or things can I prioritize in order to remain relevant to that audience? Should I remain relevant to that audience, right? We are in a time right now when data is king or queen, or data is queer. How about that? Right? You should track everything that you possibly can, but you shouldn't let the tracking of that data keep you from building the things that you can possibly build, right? So there's always about striking a balance. To the extent that you can build systems, apps, products, things, whatever, that are going to deliver data to you that you can then act on, you're thinking a lot more, you're thinking into the future, and it's a lot more than a lot of founders that I see. And I see over 10,000 applications per year for our Global Accelerator program alone. Now, I want to call out that we have 27 minutes left on the clock. I also think it would be great to hear from the audience what things you want to hear about. But David, is there a question on that list that we were given that like particularly resonates with you that you think our people would like to participate in?
Let's see. Well, let's see. There's one about inflation. There's one about a recession, potential recession coming up in 2023. There's one about the economy, which is sort of the same thing. What are the major factors? Why don't I take that one? I'll go macro on you. All right, macro. All right, so I say my life is great, my firm is great, everything's good. The world sucks. There is so much tragedy and war and problems around it. It's painful. But in our little way, we're making a positive difference. Everything that you do as an individual, to your friends, to your family, to your community, to the people you work with, it helps. And if you're, again, positive, it's going to be good, and we'll get through this. We've got through much worse situations in the world. So don't get depressed. That's not helpful. So with regard to the economy, of course, the market multiples have come down dramatically because the world was looking at what we call risk on. When interest rates are super low, when the government was, I think the government is always to blame, they were keeping interest rates so low for so long, it just was completely unrealistic and unsustainable. But politicians like that because it helps them. So anyway, this is bipartisan. They kept the interest rates too low for too long, and so prices got inflated like crazy. And everything was risk on. So everybody loved venture capital and loved entrepreneurs. And now everybody kind of like, oh my God, venture capital, and where's the cash flow, and show me the money. So it's a different environment. So just get real with that. If you can do things to cut, wasteful burn, if you can increase sales to show growth, that's the most important thing. Our companies that are showing growth are getting oversubscribed and doing nice up rounds. It's the folks that are not growing very fast and they're still losing money that people who are new investors get concerned about. So that's easy to say and hard to do, but I'm saying there is now a preference for, growing revenues fast. Cash flow positive is wonderful if you can get there. If you're a startup, not so much. I was telling earlier, we look for 2 years of funding when you're doing a budget to go to VCs. I would say definitely don't ask for 12 months of funding. People will look at you, I think, like a little bit crazy, because people are expecting a recession, or maybe we're in a recession. It's hard to measure, but it's certainly not the environment we were in 2020 and 2021. It's a new world. The world is in some ways better. We are more flexible in terms of hybrid work situations. Almost all of our startups are born global. In other words, they have engineers somewhere and somewhere else in third place, and then headquarters is kind of distributed often. There are a few companies that are doing it traditional way, that's fine, but hybrid is completely acceptable these days. What else can I say? We tend to know a lot about the B2B area. So that's what I would say. And for you guys in the B2B area, it's great because this world is still full of large corporations with very strong balance sheets that have a lot of productivity problems to solve. AI future potential is huge for them. They're the ones that can apply it the fastest, and they can really take advantage of their proprietary databases. So our world is not sucking wind at all. I mean, our companies are doing pretty damn well. Now, I think in selling consumer things that are required to have low interest rates, it's much tougher. So if you're selling housing or used cars or anything like that, where people borrow a lot of money as consumers to buy, and interest rates are now 5, 6, 10%, where they were 1, 2, it's a tougher world for you. So my empathy. I'll pause there, but that's what we see from now.
Yeah, so kind of building on like the macroeconomic perspective, right? I think whether I'm seeing in the chat, there are some people who are representing sort of like the startup universe, right? I've got a company that we might call venture backable, and what venture capitalists care about is that a company can grow and scale at a pretty, essentially that up and to the right. Yeah, up and to the right. That's good. Up and to the left would be bad. People can grow a company that scales up and to the right. If you've got like a local business, which I know the startup community also serves, the advice is a little bit different. But in terms of teasing out common themes, particularly within the global economic picture, what we know, or what we are advising our companies to do, is that every company should take prudent steps that the current conditions are going to sustain into late 2023 and possibly beyond. So like, what does that mean, right? What we think at our firm is that these conditions are going to continue. I personally think, this is not 500's view, but I personally think that we're at a time when the metrics and the patterns that we've seen identified through economic outlooks, financial analyst outlooks, whoever your person with like a crystal ball is, right? We're seeing more and more disruption in how people can predict the future. So when this happens, I think that it's always about going back to basics, right? There are two things that come immediately to mind to me. Number one, you need to be watching your burn rate if you are a startup founder. For those who are not startup founders, terms of burn rate means how much money do you need to spend each month to stay alive, as well as your runway. And for those who are not startup founders, your runway is how much money do you have in the bank and how many months does that translate into. So you should be watching those two things like a hawk, right? I see a question in the chat here about if a VC would rather invest in somebody who's doing like exponential growth or steady growth. Right now, I don't know that I even necessarily, I mean, obviously the answer is like exponential growth, because if you can explode during these times, then fantastic. A way I would reframe that question is, if you're producing steady growth in this time, amazing, right? Like, because this is like kind of a weird time for everybody, right? So think about the choices that you have, right? And remember, in terms of like spend, and remember that simply staying a solvent organization, or an organization that might be, having an eye toward how long you can stay alive, but you're managing that situation well. That's what venture capitalists are looking for. And I think that advice can also be applied to people who are running non-venture backable businesses. The second thing that I would contribute to this conversation, because we have a question later about labor markets and whatnot, is that, don't forget, during all this shakeup, we've seen a lot of people leaving companies and doing layoffs. We've seen a lot of people who are shaking up the types of jobs they do because of a layoff that they may have experienced, or like whatever. Don't forget our community in that time, right? Don't forget our community in that time, because it is the queer community that needs to lift itself up, because clearly, at least in terms of the United States government, no one's going to come save us but us, right? And so just because you can get great talent, that maybe is available from Twitter or FaceSpace or some other wonderful organization that I'm required to say by like legal requirements, but like, note the eye roll. Make sure that you're getting talent who represents our community, because these people who go back to their communities, they have a household they have to maintain, right? Let's support them. They have friends and other people within their own sub communities that they need to uplift and refer and all that kind of stuff. So when you see these kinds of events that happen that really, shake the core foundation of not just our community, but all players within, an economy, this is a time for us to do what queer people do best, which is to rise up, support each other, make sure we're putting our community first, because the people who get into these roles, the people who are able to continue with their startups because they got investment, the people who decided to start a startup because they were supported by a community, these are the ones who are going to have a head start after this current economic climate levels out, right? And the only people who can give that gift to us is us. David, you look like get something you want to say.
Yeah, I have 2 points. First, the question about growth. Accelerating both growth is better than steady growth, except if the unit economics mean that you're subsidizing those acceleration curves. If you're losing money and more money because you're selling in more volume, that's probably not great. Again, this is an area where consumer diverges perhaps from the B2B world. We try not to lose money on any sale in the B2B world. Many consumer folks need to get to a certain critical mass. If you're doing an app, I get it. That's, again, above my pay grade. But we like to see that the unit economics make sense for each individual customer. And of course, there's some early time when you're going to be putting much, much more effort on the first initial customers. But after you get to some level of what we call product market fit, the numbers on your margin should be getting better, not worse. So that's what people will be looking at in, say, the Series B and C and so on. So it depends where you're asking that question about steady. Later stage, folks are happy with steady. It's at early, you want to be showing acceleration because you, in theory, are in a tiny position addressing a large market. And so you want to show that you're underpenetrated and you're able to really rise quickly in terms of the future will be very big. Okay. Now I'm going to go and disagree with my friend Aaron a little bit. So for some of you who came in late, I was the first openly gay venture capital founder in the world, I think. That sounds crazy, and if I'm wrong, fine, good, congratulations to whoever that other person was. I don't think I faced a lot of discrimination. I'm sure I faced some. People wouldn't probably tell it to my face, but they might have said, oh, I'm not going to invest with that guy. But I don't believe in discrimination at all. So I don't favor helping Jews. I don't favor men. I don't favor gays. I just favor whoever is best for the job. So that's the way we run. And I think I call it the Martin Luther King way, that we don't judge people based on their immutable characteristics. We judge people, we're all children of God. We're all, biologically, we're all actually cousins of each other. We're literally the same people. And so I don't like to have one group over another. I'm happy to give a lift up to somebody who hey, they've really struggled. They're really hungry. They want to work hard. That's great. And we do that. But I'll just put that out there to have a little bit of controversy.
Good. This is the part where I get to what is it? Cross-examination redirect. I don't know how law works. I'm not a lawyer.
Whatever you want.
Also, David, thank you for bringing this back to data house, because I can get a little sometimes. What I want to qualify, because David makes an excellent point, right? We shouldn't only be holding the door open for queer folk, right? I don't think that's a reasonable expectation. What I do think, though, is being a good founder or a good business operator is about doing the things that need to be done when they need to be done and having a good plan, right? And what I see with a lot of people who are doing hiring, for instance, right, is they post the job at the last possible second. They have 48 hours worth of resumes. They pick the best one and they fly into it. And I'm like, oh no, do you have any idea what you did to your burn rate? It gives me, this is why I'm gray in this patch here. This part I'll tell you about later. But when I say prioritize the queer community, I don't mean only hire queer people. What I mean is hold the door open a little bit longer, do the extra work to make sure that you are to the best that you can, because it's hard to do this through a job application, right? Identify people who are queer, but also go to StartOut, right? Ask for referrals, go to people who know things
here we are. We've shown up. Show up.
Exactly. So don't hire at all costs, but make sure that you have that thought in your brain as you're making business decisions that are relevant to your company. Cool. We've got 14 minutes. I haven't seen a lot of other questions come in, David, necessarily. I am seeing one about raising funding at the moment. A lot of VCs there are doing pre-seed. The reality is that they want to see growth in data or traction. What do you do when you have a great idea, but you don't yet have data or growth?
Okay, if you don't have growth, that's fine, because you're pre-revenue and you're trying things. Sometimes you can have growth without revenue. I'll give you a history. One company we backed called Hootsuite, HOOTSUITE, is a data management system for social media. So it's a platform for marketers to manage many social media streams. We got Facebook and Twitter and all these different things with different time zones, different languages. It's complicated once you get in any scale. So this company, when I first found them, had 125,000 customers, all free. Nobody was paying anything. It's a freemium model. And what they were doing is they were establishing what the metrics of usage were, and then they were testing different features and then trialing pricing. And then we were able to sort of build a curve of what maybe SMBs would pay this and larger companies would pay that, and which features were most valuable. And so then they built this freemium model, and that worked great. And we've made, I don't know, 40 times our money or something like that so far. And we still have a bunch of shares left. We sold some in a secondary. That's one thing. This is more of a VC to VC thing, but there's a new level of liquidity that's come into the play from, say, a decade ago. And that's early stage investors, whether they're angels or VC funds, selling to later stage investors, private equity groups, growth groups, and so on. That's a big thing now. I just got an offer today while I was in morning meeting with one of our existing companies. Hey, we have a block of $20 million. Would you like to buy in one of our existing companies? So we could add to our position, or we might take that lead and say, oh, we'll sell some of ours too. So there's a new flexibility. Water finds its level. And so when there's a constraint on liquidity, like the stock market is not having a lot of IPOs right now, so other folks will step into that breach. So it's an interesting thing. You can think about it for liquidity for those of you who are entrepreneurs and founders. You can sometimes do a little bit of secondary as well as primary if you need to put a roof over your head, as well as raise money for your company.
Yeah, I'll echo that. I think the hardest part about building a unicorn company, as they're called, and I feel like the queer community should get more credit for that term, but we don't. The hardest part about building a unicorn company, which is a company that is worth $10 billion or more, right? What we think
$1 billion, I think.
I'm sorry, $1 billion or more.
I think it's a private company worth over $1 billion is a unicorn. A decacorn is $10 billion.
Thank you. I misspoke. What I would say about that is that, you know, the hardest part doesn't come at the end. I mean, certainly it's difficult. The hardest part is going from 0 to 1, almost always, right? Because they're just like, oh, there's this whole continuum of things I could do, and I don't want to make a wrong step. So how do I go about, you know, doing the right thing? Here's the thing about being a founder of anything, right? Whether it's a VC backable business or any kind of business that you want to start, there are there are bad answers, but there are often not wrong answers. And here's why, right? The thing that you need, whether it's a customer who becomes your investor because their revenue is what powers your business, or a venture capitalist or an angel investor who becomes your investor because they give you a literal investment, you need to build something that people want, you know, to turn a phrase from another accelerator who shall remain nameless. The thing to know about that is that if you can't show just gobsmacking sales, right, or even something that approaches that, what you need is evidence, right? Let me answer this question from two different perspectives. Number one, if you don't have any evidence, what kind of evidence can you build, right? If you can't actually sell the product or sell the service, you can do some growth hacky things called like, you know, building a wait list for something, for a product that doesn't yet exist, and find ways to market that. And the wait list will validate that people want to build this, as long as you're clear on like, what is it that you're selling and why is it valuable and what are people getting if they get it, right? So that's one way to go about it. I'm not saying it's the only way, but that's just like the first thing that lands on the top of my head. The second thing to think of, oh, David, please.
No, well, I have another one. I'll just, after your second, I'll pop in with a
Oh, no. Let's finish that thought. Go for it.
So we have something at Blumberg Capital, a CIO council, Chief Information Officer Council. We also have CMOs and CISOs are in there, Chief Security Officers, Marketing Officers, CFOs, sometimes other tech leads. And what we do is we meet with these folks about 4 times a year and ask them, what are you looking for? So for example, we knew that 10, 15 years ago, digital storage was growing exponentially, the demand for digital storage. The cost structure of an organization trying to store all this stuff could not expand exponentially. No CFO would let them spend that much. So I did find a different cost curve to go on. So we met 3 founders. They had no product. Okay, this is, again, we mostly invest in companies that have 0 revenue. So these guys had 0 revenue, but they were able to sketch out, here's what we'll build. And what they said is EMC is selling these very expensive software and hardware systems together, software together, like 10, 20, $50 million at a slog. And they're very inflexible, hard to manage, and you can't scale it up, you know, if your data storage needs are growing fast. So they wanted the virtualization of storage. And so what guys came to us from Google and they said, well, we know how Google does it. They buy commodity hardware. They don't buy EMC. They buy commodity hardware servers for data, and then they put their fancy software on top. So we, and this company's called Nutanix now, it's a big public company worth, I don't know, $7 billion. We were the first investors there. And what we did is we took them to our CIO council. And we said to the CIO council, you guys have told us that your digital storage budgets are going crazy, need a different cost curve. Here are these guys, let them present, and if they build it, would you buy it? And 3 hands went up, we'll be the first customer, and you know that company was off to the races, and they did extremely well. So sometimes you can show somebody with a technical slide and a project stack and how you're going to do it, this is our roadmap, and you can get enough people to say, you know, we have trust. Now, it helps to come with a VC like us that has credibility and has these people, and we've brought them, you know, good things in the past. 500 would be very similar like that. They've done many companies where they can get you in the door. So that's, you can either do it through your own resources or through an investor, or advisory boards are great for that. And that's another way forward without revenue.
Yeah, and so what David and I are talking about there's like, what I talked about was kind of like a B2C approach, right? You know, building a wait list is not something that somebody who's in procurement over at Intel is going to like get on, right? But what a B2B approach would be essentially what David described. And, you know, the 2 things to be aware of there are like, what are the incumbents, right? How are people currently solving this problem? Because in most cases, not always, but in most cases, there's going to be an existing solution in place. And why is this better? And then number 2, why would they move from the thing that already works over to the thing that you're proposing, right? What does it make better? What are the efficiencies that are created, and what are the values of those efficiencies? So things to think about there. And again, B2B and B2C, very important. A reminder to the audience, if you have questions, please put them into the chat. We're here to like jam on it. Otherwise, we're going to talk about boring economy stuff.
We want to hear from you guys. What's on your mind?
Definitely. And to finish my thought
markets. Go ahead, your other point.
Oh yeah, just to finish my thought from before, because the question that we have, the original question was like, what do you do when you can't generate growth? What I want to talk about is I want to represent the VC mindset when I have a person who puts a pitch deck in front of me about give me money and I will build this for you. What I don't see if the person, like I look for people who have quit their jobs and like their whole life is in this, right? And the reason why I want that is because they're going to take my money and they're going to like do something with it, right? Where other people are like, you think about treating them like contractors, right? I want some evidence that you're going to eat, breathe, and sleep this, that it's not just a casual thing that you're going to do at nights from like, 6 p.m. to 8 p.m. sometimes, right? So, I don't know that it necessarily answers the question about how to demonstrate growth, but like make sure that when you come to these people, it's not just a deck. And if you are just sending people a deck and you aren't doing the things that are necessary in order to show that you're fully committed to the idea, that signal, not exactly expressed, but perhaps inferred, may be what's keeping you from progressing to the next stage. And it's at this moment in time, I'm going to jam into the chat. For everybody who's
questions there, Aaron. I'm now looking at the chat for the session. I was looking at the backstage chat. We're boring. You guys are interesting. So let's
100%. And then
through these.
Perfect. For people who are here, I'm, by the way, jamming a link to my calendar. Book 15 minutes with me anytime. Thank you for showing up. Showing up is half the battle. My job is to show up for the StartOut community because I love StartOut. I benefited from it. It helped me get to where I am, and I want to help you get to where you're going. Now, the next question that we have here is, what is your opinion about the investment in LATAM startups? David, you want to take that? Or
yeah, I just came back. I was just in Mexico City, and I was in Monterrey, which is so beautiful. It looks like Century City. It's like Shakaru. Like people don't expect that, and it has the highest GDP per capita in all of Latin America. Monterrey, Mexico, very very close to us. It's like 6 hours from Houston. Anyway, Mexico is going through a boom right now. There's a lot of re-onshoring from the China trade, which is going downhill, and this is going uphill. So in a good way. So a lot of new stuff on the Gulf Coast alone. There's $200 billion worth of capital investment in energy-intensive investments. So aluminum, petrochemicals, all this is going from Louisiana all the way over through Mexico. Mexico has a very educated and hardworking young workforce. U.S. has Silicon Valley, it has Wall Street, it has big corporations. Canada has excellent technical staff too. So the three of us together, North America, are a powerhouse. We have all the resources. We have gas, oil, coal. We have all the minerals. We have all the tech, and so it's a really great thing. Now, if we can help Latin America as well. LATAM has been suffering with a bunch of bad elections recently. So a lot of the countries are voting for kind of anti-capitalism. So it's going to be harder for a lot of those folks. But still, Mexico is strong. Ecuador is strong. Brazil is a big country and growing. All these countries are young, and so they need technology. They want to move ahead. We haven't seen enough yet coming from Latin America selling into North America. Mostly it's within LATAM for LATAM. So a lot of the startups we're seeing are like, I'm doing something in fintech for Mexico, and then I'm going to expand to LATAM. That's a fine strategy. Our firm is not great at that because we can't add value. We want to add value. So if you're from Latin America, coming into Miami and then going to sell to New York and Chicago and Paris and London, that's perfect for us. So we see the U.S. as the hub, and then other countries as kind of spokes in terms of enterprise software. No colonial judgment there, but it's just that's the way that world works. Other people pursue these more, again, LATAM for LATAM, fine too. I think it's a riskier market than the U.S., but it's a growth market. It's much less demanding in terms of its SLAs and so on. People are more willing to take a little bit of risk, but the big companies operate pretty much like U.S. big companies too. So don't fool yourself that they're going to ask for much lower standards. They play by world games, even though they have maybe a protected local market. So you can't offer a lower product, lower quality. They want good quality too.
Yeah, I think there's a little bit more information I need to like maybe get to the essence of this question, but 500 Global is, just to say global one more time, a global fund, right? We have funds inside of the LATAM region, and so the thing as a person who is building a company to remember is that the person who's investing money into that company, whether that is the VC themselves or our investors, because money doesn't get made by us, right? We still have to recruit money too, right? And our investors are called LPs, limited partners, right? They generally have a geographic focus or some sort of geographic bias, which is why, asking an American investor what they think about a LATAM company is going to get you a different answer than asking a LATAM investor what they think about a LATAM company, right? Because they're from that region, they believe in that region, they understand that region, they know what it wants, like all that good stuff, right? What I would just quickly highlight, because I'm coming up on time, is that I'm seeing, especially through the digitalization and the office flight, a lot of people are working in many different places. You're seeing a lot of tool sets that are preferred by certain regions bleed into the American market, and that gives a lot of like B2B services an advantage. In particular, we're seeing a lot of engineering prowess and activity getting built up specifically in CDMX, but like in regions that are kind of like around that area. I think Mexico is specifically, and LATAM in general are on the way up. So feel free to book some time with me, and I'm happy to take you through whatever your specific question was. We've got
Yeah.
40 seconds left, David. Do you want to have any last words?
Again, life gets better. Venture capital is an amazing career if you want to jump into venture. We're hiring. Entrepreneurship is a great career as well. It's a bit roller coastery, but just remember this: if you're delivering value to other people and from their own free will, they're buying what you're selling, you're doing something good. Capitalism is a force for positive trade, and we're not talking about exploiting or anything like that or giving partial information. If you're giving full information and they choose you versus somebody else, you have served them better than they can serve themselves. So keep striving. Fall down 7, get up 8. Ancient Japanese phrase. There will be declines and depressions and divots in your path, but it does get better over time. And if you're building with a team and you can rely on people in your tough times, that is a great way to go. That's why a long-term investor relationship is so valuable. Most investments last longer than the average American marriage these days. More than 7 years, which is shocker and sad. But it's very important to choose the right VC. Choose people who are not jerks, who have long-term focus, and are going to be there for you even in the tough days, and not just cheerleaders on the good days.
Yeah, I'll have to integrate 500 Global. We're not jerks into my business card. But David's got great points there. I think the other thing to remember, specifically as a person, I'm born and raised in Cheyenne, Wyoming. I grew up on a cattle ranch. If you would have told me at 10 that I would be doing this, like now, like I would have like laughed you out of the room and said, "Why are you talking to me?" But the thing that I would remind specifically people who are joining like this space is prioritize building communities, right, for yourself, whether that's talking to other founders who are doing the same things that you're doing and going through the same sorts of struggles, right? Like you need to like find out the best practices. What are they going through? And remind yourself what's happening to me isn't unique to me. This is what founders go through. Find queer communities, right, that you can access talent from, give advice to, help build up in this way. Find entrepreneurial communities like StartOut. Participate, show up, don't be shy. Like no one has the answers. The best I can hope to offer on a given day is what's the right question most of the time, right? So like I can help you think through that. That's what we're here to do. People did that for me. You'll do that for others. We do that for each other. And shameless plug just for 500 Global, that's what makes 500 Global different, is that we specifically do accelerators and programs and this kind of stuff as part of our investment strategy, because we believe that building communities of founders and cohorts, and then introducing those cohorts to other cohorts, not just from the same geography, but all over the world, that's what helps founders of the same type get to know each other, trust each other, build each other up. And that's how we think about scaling. So with that, I think we can wrap. Thank you all for joining. If our friends from the other panel are here, I'm glad that you enjoyed the show. I hope you enjoyed the show. We'll catch you next time. And please continue on to your next session. Take care, y'all.
Thanks, everyone. And we're blumbergcapital.com. Take care.
Bye-bye.